Today we are going to do analysis on some pairs: the GBP USD, gold, Euro USD, and BTC and Nasdaq. So we are starting with what we are starting with GBP USD. So this on this on this GBP USD, this is a daily time frame, right? Let's go to the weekly time frame and see something. On this weekly time frame, this go more this weekly time frame, you could see that GBP USD swept and rallies to the upside and swept what and sweep these highs over here, right? Sweeping these highs over here, and at the same time these other blocks, right? And the price has swept above the other blocks, right? And after price did that, price reversed. So if you see the daily time frame right now, we are now in the daily time frame. So you see how price swept the highs to the left. Price swept the high to the left, and, and doesn't even close above it in the weekly time frame, and it dropped to the downside, causing a change in state in delivery, market structure shift in the daily time frame. So right now, the question is, where are we heading to now? The question is, where are we heading to now? Where will price likely to go? Or where will price likely to retrace to? The question is, the answer is right now, in the daily time frame, right now, we have, in the daily time frame, right now, we have what? If you measure this thing with a Fibonacci from the top to the downside, from the top to the downside of the market, you could see in the premium, we have this inversion effigy in the premium. We have this inversion effigy in the premium, and in the and in discount, not in discount, we have two effigies, which are this effigy and this one. Two things can happen over here, and the two things are either price will what will cause a divergence, which is SMT divergence, and tap inside this what inefficiency at the upper side over here, because you can see we have some equal highs here at the highs here, equal highs. And if you see this, if you go to the weekly and you see it, you can see that we are close above this what we are close below this candle, right? And we need to retrace to what retrace and what and find a what retrace and find a point of interest and fall to the downside. But in my analysis on this pair, we can trade to this what we can trade to this what we can trade to this FEG here. But if it were to be me, I won't take any trade from this FEG. I won't take any trade from this FEG. I would rather wait for this FEG to be tapped in, or this extreme, because I am sure SMT divergence will come into play. because we have this a breaker, you have a breaker, and we have this, and this is I see this in what a 2 month discount. So I anticipate price to what, to rally to this place or to this place before we see a dump to the downside. Okay, so right now we are done with GBP US. Let's go to Euro USD. Yeah, Euro USD in the weekly time frame. No network. Euro USD in the weekly time frame. You see we have an order block. We have an order block here and a fair value gap. Euro USD trade into it and reversed. And right now we close below the order block, the up close candle. So right now, and this means what? A change in state in delivery of price. So if we measure from the upper to the lower side of the market, you can see the 50% is lying here. It's lying here, right? So between GU and EU, right? GBUSD and Euro USD. GBUSD will give the highest probability trades than EU because EU doesn't have any point of interest in the daily. It only have it doesn't have any proper inefficiency. So yeah, we have to go to trade into what? Premium and what? And give and dump. So this is what I anticipate on what on EU. This is for our time frame. Okay, let's go to what again? Let's go on what uh, gold. Um, uh, since I've been working on gold, and we have what reached a support zone over here, what which is a monthly FAG reflecting in the 3 months. So we go to the weekly time frame. Yeah, we go to the weekly time frame. We could see right now gold doesn't ever what doesn't close below this. But if you see SMT divergence, like if you compared SMT, you could see that what XAG, its correlated asset has what its correlated asset has what taking the other blocks low, which is the series of up close candles. That's the market structure break. So right now we are going to take this analysis and compare it to gold right now. So from the weekly, what are we doing? Let's so as the break market structure break right now on gold, let's do what? Let's put a fib on it. So if we go to what daily time frame, right? You could see that. See here, we can see so many things over here. Price went to the what? Price went up to the 50% and reversed to the downside. And at the same time, if you see daily time frame, you could see that we do what? Here we change state in delivery. We sweep liquidity below these lows. SMT with gold. We sweep liquidity below these lows, but gold couldn't sweep liquidity below these lows. That shows relative strength in gold. that gold is not institutions are buying gold in advance. They don't want gold to go down any further. So that's a strong conviction that gold will buy. So you see, this is a change in state in delivery. Price reached the 50% level, sweeping this high to the left, and reverse into the what? Into the FEG, right? Reversing into the FEG, fair value gap, liquidity sweep, market structure shift. Price present an FEG in the daily time frame. So let's remove the what? The weekly Fibonacci tool, and let's apply it on from the high to the from the low to the high of the what? Then you should see it very well. That what? Price did what? Look at the lows very well. Look at the lows very well. Price change, price sweep liquidity below that low, and it did what? It sweep liquidity below that low. Market structure shift. It presents an FEG. We tap inside the FEG, and the FEG we tap into the 50% below the 50% of the range, and below that 50%, you could see that this candle hasn't swept the previous candle's low, right? But if you see gold, you could see that gold has swept what? Gold has swept the previous candle's low. That's a relative strength index that price is willing to go up. So from Monday we can start looking for buys on gold. Yeah, we can start looking for buys on gold because price is in a discount, and it has changed it in delivery. But between gold and silver is going to give the highest probable trade of the week, because silver has every quality. Because if you go to the 4-hour, you could see that in the 50%, it has offered an FEG. You could see the fair value gap in the 4-hour change in state in delivery. So that's the help probability setup. If it were me, or I would take a silver trade rather taking a gold trade, because silver will give me the highest probable trade of the week. So let's measure gold on the 4-hour, from the swing low to the swing high. Yeah. So gold is in what? A discount price, and we mitigate this. We change state in delivery in the what? In the premium before we get to the discount. So this is a buy market. So right now, we'll be getting ready. We'll be expecting buys on gold, and some retracement on some buys on euro and GU, and some buys on gold. So Monday we'll be buying gold on Monday by is it by 12? By 12 is it by 9 or 12? Is it by 9 or by 7 to 9, 12? You start buying on gold. Yeah, start buying on gold. The first 8 hours we start buying on gold when the market opens. So try to look for buys on gold. If it were to be me, I'll wait for price to what? In the 4-hour retracement, I would have wait for okay, gold has traded into the 50% of the range. So I would have wait for the 4-hour to change state in delivery, or on a distance, wait for some buy signal and buy on gold. So let's go to BTC. Okay, BTC, BTC. Let's go to the weekly time frame of BTC. Okay, everything should reflect on the chart by now. Okay, all right. Let me clean this. So we have this market structure break on BTC in the weekly time frame, even though the monthly will be trading into premium on the monthly. But let's work on the weekly this week and let's see what we have next week. So price will do what? Price has break this structure, sweeping the what liquidity to the left. SMT with what? Ethereum. Ethereum hasn't swept this week, showing relative strength in Ethereum. So right now, what are we doing? Let's measure from the upper side to the downside of the price. Let's see how everything went. So you can see some equal highs right here. First high, second high. I draw a vertical line on that. Is it a horizontal line? A vertical line on that, right? First high. So price what swept that high and reversed. So if you go to the daily time frame, that's the reversal that price caused. So if in case what BTC did what? BTC we don't know where BTC what closed, right? But if in case BTC closed, then we'll be mitigating this an inversion of FEG right here to the 50% of the range and fall back to what? And fall back. And in the analysis I did, I found out that what we'll be having what BTC at the what at the BTC what sweeping all these lows to the 75% of the range, to the 75% of the what of the range of this range, right, before reversing to the what to the premium monthly premium level for us to sell. So let's see, let's check on Nasdaq. Okay, Nasdaq is selling very aggressively. So Nasdaq on weekly time frame, we have closed. Okay, so we have closed below this. We have closed below it. So right now we have a market structure break. Let's see. Market structure break. Market structure break. So if we from what to here, we have the then we have from here to here. Now, because if you want to use this right now, from here to here now, at first 50% of the range of the weekly range. Now weekly doesn't show any distance. So right now what you will do is okay, in the daily, let's do the analysis in the day because the weekly is not too clear. So we have this FEG in the what in the daily time frame, which will mitigate and what continue the chain. So that's all for now. Have a nice day. Monday we'll buy we'll be buying gold, GU, EU, we'll be buying GU, EU. Retracement on Nasdaq, sells on BTC depending on market structure. So have a nice day and a nice week, and thank you for watching.